Yo, yo, what's going on in the hood? How's everybody doing? Hey, hey. Hey, Alex, our chat room is 99 bucks a month. It's free for all, boot camp students and hedge fund members. The regular price is 99. Hey, Michael Chesnut, what's going on? Good morning, everybody. Anybody got any hot stocks for the morning? Hey, Bob, how you doing, sir? Good to see you in here. Good morning. Yeah, Wes, this is my childhood room. I'm back and forth between Michigan and Florida a lot. So most of the year I'm in Florida, but my home is actually in Michigan. That's where my parents are. So I'm here like kind of half and half because my mom is a very, very scary woman, and she does not like when her kids are out of that house. And so, lo and behold, I was supposed to come here for one day for a wedding, and now it's turning into a 1 month Michigan extravaganza. So this is my childhood room, and so I'm right back in it, man. My computers were here, and I just popped right back in and started getting to work. So, guys, let's get to work. So let's first go over the market, and I'll go over some stocks I like, and if you guys have any um, questions on anything, just let me know. Florian, my man, good to see you in here. Jesus, long time no see. All right, all right. Let me get the screen share going. Florian, man, you owe me an email, man. You've been gone forever. I am. Look, Google Talk. You know what that is? Hold on one second. Can you guys see my screen? I'm using my MacBook today. Hey, can you guys see my screen? I'm using my MacBook today, and these things are just woefully a big pain in the punker on how to use. Hey, Maddie Trump, can you see my screen? Oh, okay, good, good. Sorry, guys. I don't know what happened. We have a bunch of guys in my chat room that told me I need to get a MacBook because I'm always having laptop problems. So I get like the most expensive MacBook ever made, and it ends up being like a $4,500 paperweight because I can't really figure out how in gosh's name to use it. So go figure. Okay, so let's take a look at the market. So after this big, big extended run, we consolidated for a month here and kind of just pulled back to a key support level. And the last couple days we've been right back, right back into the thick of things, and we're right back at yearly highs. And so, so far, this bull market that we've been in is just continuing. I get a lot of questions on how long it goes, and it just goes till it stops going. You never know till you know. That's kind of how these things go. Since 1999, when I started trading, the market always extends so much farther than you ever anticipated. Sometimes it can be years, and so it's very, very hard to kind of be like, oh, we have some down days. Every time we have a couple down days, everybody wants to think, okay, the market's rolling over because we've been up for so many years, but it doesn't necessarily work in a linear manner like that. Oftentimes to build a top into the market is a big long process, and then there are triggers in terms of geopolitical and economic news and things of that nature that kind of take it down. But those are once in every 10-year events, and so granted we are on a year 6 of a bull market, but it doesn't mean that we can't go a lot higher. We never know where it's going to end. So let's take a look. So the S&P is right back at highs. Now, one of the things to remember is that it's really been the Russell 2000 that has been the weakest one in the market, and it's been the one that's kind of it holds down the market at times, because this is where you see a lot of your riskier type names, a lot of your newer companies. We trade a lot of the IPO type companies. So those tend to fall into the Russell 2000 index, which is a broad-based index, but it has a lot more small cap type stocks and newer names, because, well, frankly, it's made up out of 2,000 stocks. So you're just going to have, a wider mix. But, once you really get past 500, 600 of the biggest companies in the country, you're getting into a much smaller type of market cap of the 50 million, 100 million type of companies. So the Russell 2000 has been bouncing, but you can see here that we're just in a range. We have highs here, and then we have this monster support level down here, and we're just trading in a range. And that's what can make things a little bit trickier, when you're trading, is when you get a stock or a market that is range bound, then what happens is the movements at times will have less rhyme or reason, because only when things are trending do you start to see, your moving averages and certain techniques work. When you're just in a range, there's a whole different style that tends to work. And so, what happens is, if you can't adapt to that, your results will be mixed. Just like if you're in a stock and it's just sitting there sideways in a 10-point range for months and months, well, if you're day trading it, you can't really use momentum techniques, and you can't really use trend following techniques, because that stock is not in a momentum phase. It is not trending, and so the moves are more haphazard, and so you have to use a more a reversion to the mean type of trade rather than trading a breakout. And so, also remember that when you're looking at markets, is hey, what's happening in the big picture of things, and where's the market going to run, and where's it going to fall? And so the big thing with this Russell, though, is just to remember that it's in a range, and so the range seems to be getting a little bit tighter here. So maybe we'll finally make a break and either test the lows or the highs, and that'll kind of give us more of a longer term direction. So let's take a look at some of the stocks that we've been watching, and we'll go from there. Dun, 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 dun. Hey, I have a Windows 7. I have Windows 7 on all my other computers. I'm using, I got Parallels on this Mac. Parallels works okay, but it's nothing special. So one of the stocks that I'll be watching today is this Moby. So Moby came out of a consolidation, a little bit of a pullback the last couple days, and had just a really, really big run. And you can see this 950 mark was pretty important here, and so it took it out. So a lot of people, when they look at stocks, especially on a day trading perspective, they think, okay, well, you had the big move. Did I miss it? No. What happens with day trading typically is, yes, you missed the move if you're a swing trader. So if you're a swing trader, meaning you want to hold this stock for more than one day, then yes, you missed your entry. You needed to get it down here, or maybe even up here if you could have got a really good intraday setup to align it on multiple time frames. But if you're a day trader, you've just had one day of thrust. And so one of the things to remember about breakout stocks or stocks with really, really good charts is that stocks will tend to run for 2, 3, 4, 5 days in a row. And so as a stock is coming out of its move on a swing trade basis, you can play the intraday setups and align them all till that move is over, or till you start to see some type of rubber band setup, which will cause a snapback. And so that's just something to remember. So when we're looking at a move like this, essentially you've got the move. Now, anytime you're day trading, you have an assortment of day trade setups, intraday setups. So you want to align one of your intraday setups with what's happening on the bigger picture move. And so there's different setups that you use for the open. There's different setups that you would use midday, and then there's end of day setups. And so depending on the time of day, that's how you're going to align your setup. And so, if you're looking at this stock and saying, okay, Moby is doing X, Y, Z. So, there's a whole host of things that you could be doing. One is maybe you're taking a red to green move at the open. You're taking a red to green move at the open. That's something that would typically happen the first 5-10 minutes. Or if it starts out hot, and you start to see some type of flag or something, there are moves like ORBs where you get the big pop and then you get a tight flag intraday and then you continue on. So making sure that you align your proper setup is going to be really one of the most important things. So, if Moby keeps going like this, then, the next moves that you got to really watch are, what kind of follows these things. So, a stock that, we've traded often, when it was making a move, and we've tried to catch this bounce a couple times, is this JRJC. So if you start to see some of these Chinese names move, it's very, very important to, whip out your toolbox of, of charts. And so, like, I keep a personal watch list of, like, China stocks. So, I've got 173 Chinese names, and then I filter them in a lot of different ways. Volume, volatility, momentum, daily range. And from there, will pop up, a handful of stocks. And even out of these, I've filtered this list even further to the names that I trade the most. That's always really important, too. There's going to be certain names that you just end up trading the most. Like JRJC, we trade a lot of Kihu and so on and so forth. Sohu, over the years we've traded a lot. And so you can, filter your list, but you always want to keep, lists of stocks around. That's like, I think that's one of the reasons that I can trade really fast is that, whether it's a run in, I have lists for solar and Chinese, and I have a go-to list of stocks, of names that I've traded. And so I have personal watch lists. And so if I see, XYZ stock take off, then all of a sudden what I'll do is very quickly, because I have them saved on my TC2000, is, oh, I need a Chinese stock. I need a solar stock. I need a metal stock. I need an oil stock. And you don't have to have every single name, but if you can have 5 or 10, then what it will allow you to do is pick up those names, and you can flip through the chart. Say you have 10 names and you see a run happening, it's very easy to flip through 10 charts and say, all right, star, 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 and now I've got my kind of 5 names to watch. And so that's what I'll do, even with Chinese names and stuff like that. If I see a couple of them running, then I need to have a backup. Of course, I'm most likely I'll be playing those names, but what I want to be doing is looking for the secondary moves. And so being organized and having the proper list is very, very important, because in day trading is different than swing trading. Swing trading is super easy. Swing trading is super easy in that, not easy, but in swing trading you have time to analyze things. So if you're an analyzer or an overanalyzer, swing trading is probably your thing. Because in day trading, you don't have necessarily the time to sit there and analyze and do a lot of diligence. What you have to do is be organized, have all the information you need at the tips of your hand, and then be able to access it quickly and then make a split-second decision. So those of you guys that see me in the chat room, right, our best plays, what happens with our best plays? We see something, we like it, we pull the trigger, it starts working right away, and it could be up 10, 15, 20% within the next 30, 40 minutes. But it happens instantly. Like as soon as I buy, you know, we're catching it at the breakout spot, that's where the inflection point is. And so there is no time to sit there and analyze and go, oh, I need to do this and manage my risk like this. Yes, you have to manage your risk. You have to know where your stop loss is. You have to know where potential targets are, but you have less than 1 second to do it. So you have to have essentially a computer brain, you know, to really, really do this fast. And otherwise, till you get to that point, you're always going to have bad results. Because if you can't compute dozens of variables instantly, then your results will be choppy. You'll get a level of cognitive overload that is very tough to handle. And the only way to get over that is to really have a lot of repetitions. You need thousands of repetitions, and then it starts making a lot more sense. So keep those lists, you know, always on hand. And you don't need a bunch of names in your list. Try like 5 or 10. That way it'll make your searching and scanning much, much easier. And you want to stick to the best name stocks. Another stock that I'm watching, I really like the way I took off yesterday, guys. Really probably about 10 o'clock. So, you know, one of my rules in trading, Myron was just asked me, why'd you leave yesterday? Well, you know, I missed my first few trades of the day, and so I know from my own personal habits that if I miss my first 3-4 trades, or even 2-3 trades, I usually have a day where I could lose 10 trades, 5 trades, but whatever. You let your $1,000 loss or $2,000 loss spiral into a $10,000 loss. You know, that's what used to happen to me all the time when I was more of a developing trader. Is I let my days spiral into an abyss. And then what happens is, say you do lose $5,000 or $10,000. It's not the end of the world. But what happens is it throws your mental clock off, because the next day, say your average is $2,000, $3,000 a day. The next day you make $2,000. It's a good day, but you don't feel like that because you lost $10,000 before. You think it's hard to wipe the slate clean. You think you've lost $8,000, and so what happens is that $2,000 gain you have, you're trying to get it to 8 or 10 to even out the day before, and then you'll give it back. You'll give back your profits, go negative, and so then the third day, all right, you're going to be up $1,000, $2,000, $3,000, but because of the losses from the previous 2 days, it's going to psychologically mess you up, and so you're going to have some money and you're going to want more because you feel like you're at a loss. And that's what happens to me. You know, I'll remember, right? Price, just like in a stock, price has a memory. We have memories, and it's nuts. And so what I do is say, all right, if I'm down $2,000, the account is shut off. You know, I'm shutting myself off because I know the next day, like today, I can make $4,000, $5,000 easy. You know, that's kind of, if I'm having a good day, that's what I'm going to make. But I know that I very rarely have $10,000, $15,000, $20,000 days. That's more rare. But it's easy to lose $10,000. You know, you can let your 2,000 slip into a big number really, really quickly. And so I've got to cut myself off at, you know, a number that I know I can make back easily the next day. That way I don't get into this endless string of, you know, giving back profits because I'm trying to get back that money I lost, right? It's a never-ending circle, and that's what I see in the hedge fund all the time with some of the new traders is that, you know, it's a circle they can't get off. It's a treadmill of, hey, I have losses, I need to make them back. Therefore, I can't take each trade as its own because it's in the back of my mind. So just that's why I took off yesterday. Is just like, hey, why let it spiral out of control if it doesn't have to? And you know what? I look at it as just like, I paid $2,000 to have a vacation day. So it's like, all right, I took off. I went played some basketball, hung out with some friends. Not a big deal. CSIQ is another stock that I'm watching yesterday. So this stock was a monster yesterday, as you can see. So stock like this with, a big follow through throughout the day, oftentimes into the next day, this can have a really, really big move. So it looks like yearly highs is at 45. So, we've got, or 44. So we got about $3 more of potential upside. I really, really like this chart. This is probably the best solar stock that I've seen in terms of the chart. FSLR has a good chart too, but it seems like it's acting a lot more choppy. But we have a 1-tap, 2-tap, 3-tap, 4-tap breakouts. As you guys know, right, the more times you test a level and the longer it's being held down by the level, the more explosive a stock can get. And so that's kind of, we're really seeing FSLR coil up. But till that move happens, oftentimes there's just going to be a lot of fake outs and stuff like that till it finally gets over that level because, well, that resistance level is pretty huge. And so, you often get the pops into it and then a fade back and a pop into it and fade back. So really there's a couple ways to play this is that, in anticipation, all these dips down to 68, you can nibble on some, right? And that way you have a big cushion, into the breakout. Because if you buy right it's too high and it just plops back, you have a lot of risk. Unless you have a really, really rock solid setup on 5-minute, 30-minute charts that give you a very, very high, 75, 80% probability that it'll take it over this level. And then, you can kind of preempt everything. But those are two good charts. But I like the way that CSIQ moves. And also just from trading it in the past, I noticed that CSIQ tends to move a little bit better than FSLR. The moves are cleaner, and it just tends to act easier. SCTY usually, it moves really well too, but this chart's kind of been busted up a little bit. It's just in a range after this kind of PR earnings, whatever came out. It's just in a range. It does tend to come to the bottom of the range and then bounce, and then once it gets to kind of 75, 76, it fades back. So, it looks busted, but it does tend to bounce off this level. So it's something to keep an eye on too. Oftentimes because stocks are pulling back, they often look ugly, but those ugly levels typically can be the spots where you get the most wicked bounces. And then when everything looks great, everything always looks great towards the top. And then, the bottom can drop out too. So just always kind of two ways to play it is, one is to buy on support, and the other one is to kind of buy the breaks of resistance. Let me see what we got for kind of stocks in play. Jim McCown mentioned some AM movers, Vivis, EMKR, TKI, PIR. So let me take a look. Okay, so Vivis is this is a name that we've traded in the past, way back in the past. So this is a biotech stock. They have, some fat drugs out. They've always had fat drugs out, or they're trying to make the fat pill. This back in the day, when I started the chat room and, stuff like that, this was like one of the most wild stocks around. And then it's been drifting back for, really years and years and years. So, but one of the things that we'll have to watch here is, obviously, when you get a stock that's popping like that pre-market, it's something to witness and watch. Its area that it's getting into is a little bit tricky here, right? Because you have your kind of moving average and stuff like that. But if it can break over that, then you have something that's, cleared some levels of resistance, and that can give it some potential upside. One of the things that you'll see is that when you have a stock with a PR or an earnings and it's on a bottom, that can be the catalyst that starts a run. Not always. It can also just pop and just fade. But oftentimes the most explosive stocks are these ones that, they've been on dead bottoms and they've been just dead for a while, and then boom, some type of catalyst comes in and that's how the run starts. All stocks usually come from those type of, those type of bottoms or bases. I like it. It's a good one, Jim. So we'll keep this one on watch. EMKR. So this is, I've traded this stock in quite some time. So it looks like, we've been up to 650, 615 pre-market. Let me see what the news is here. It's an earning. Done. MCOR to shade space photo 150 minutes. Blah blah blah. So it looks like they've kind of sold off parts of its business to raise some cash. So it looks like it ran into resistance here, right? 650 is kind of its resistance. It ran into it and has faded back. But this is a type of stock that's at a good level. And you know what? We won't know if it's a long or short. Oftentimes, a stock can run into a key level on the daily, and then it just kind of fades back, because the resistance is too strong. So just some levels to watch here. You can see here is this kind of $7, $6.60 to $7 range is going to be like the heavy resistance. So we'll have to watch and see how it acts, around those areas if it gets up there. But this one does look like it's got some potential, potential upside to it. So good one. The key is going to be, does it get any volume in it? The float is low, which means that it has a chance to go. We'll just have to see. Does the volume come in, and then does it hold its break? I like it. Good find, Jim. Dun, 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 dun. And then you're looking at PIR. All right. Okay. So Pier 1 imports, downgrade alert, dun, 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 dun. Okay, so it's falling on a downgrade. So typically when I play some of these gap removes, I typically like to play them, when they have earnings and stuff like that. But it looks like they did also have that. They lowered guidance, which is always a good catalyst to kind of get these stocks to flush down. So lowers guidance, revises estimates, and now it's getting a whole slew of downgrades. So this is a good name too. I would definitely put this on watch for potential shorts. When a stock clears, these bottom levels like that on the daily, then even all the bounces towards these levels intraday will get faded off. And you're talking about, it's getting down real low. So he hasn't been down there in a long time. So you're in, you're down on air now. Good one. I like this one also. Okay, I got flag that too. Thank you, sir. Boom, 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 boom. Let me dig up and see what's popping in this. Mary Beth is Mary Beth's had some computer issues today, so she's a little bit out of commission. Okay. Oh, a bunch of people have been asking me about TKAI. So I was gone yesterday when this thing was started to run. So this is an IPO stock. It looks like an IPO pharmaceutical stock. So now what happens is because of the move in RWLK, where it took off from 12 bucks down to 45 bucks, the IPO market starts to heat up a little bit. So, every little turd that goes IPO, they all get picked up a little bit. So this is a worthwhile stock to put on your watch list if you're a good day trader. But if IPOs are a little bit tricky for the average person because you don't have any price action to base your levels off of it and stuff like that. And so there's a little bit more risk and a little bit less probability, especially if you're new, because how do you measure exactly what's happening? The other thing on this one is that after that initial pop, it kind of sat around all day. So we'll have to watch this. It lost a little bit of its range, but uh, these are the type of stocks I personally do like to play. It's just it can be hard to manage your risk. When I was going through in ClickFund, some of the traders' accounts to see what they were doing. Like a lot of the traders, like when we were playing these, like a lot of the traders were in this breakout at 36. I saw a couple of them ride it to 45 bucks, and then boom, they get back all their profits because they didn't sell off all these. It dropped 10 bucks in just such a hot second. It can go from 40 to $45 in a hot second. Even the previous day, when we were trading this, and we bought this 22 breakout, it took this monster run, and then end of day everybody wanted to hit the flag again, and then it just it dumped out like $3-4, in a hot second. The thing is, even if you're trading small and you got say 200, 300 shares, it's hard to get out of these because you can hit the bid and you won't get filled because it's so thin. And so you hit the bid and you don't get filled, you hit the bid and it doesn't get filled, and boom, next thing you know, you've lost $3-4. So you got to be careful with these things. It's something that I think, depending on your skill level, you should take it as kind of something like that. If you got the skills for it, then go for it. But otherwise, there's a lot of easier stocks out there to play that are not going to give you the rug pull. XXXI. Dun, 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 dun. Sorry, I don't have my trade ideas up here, so I'm kind of I goof around a little bit and find these on the stock market watch. So MCHX, this is probably one that'll be a little bit in play today also. You can see what's happening here. This stock has had some type of news come out, and it's just getting big time flushed out here. So when you get a move like this, it's going to be a wild one. Look at the range. I mean, if it's at $8 and now it's already in the fours, you're going to have a lot of range to play with. This is probably something I'd keep on my watch list too. EPIC, somebody's asking about this one. This is a nice chart, so this is probably something I'd be willing to day trade if it can sustain its volume. Typically it doesn't have that much volume, and so if it's thin, I'm not going to be able to get in and out on it easy enough, and so you can't have that many shares. It's like if it's too thin, all you can have is a couple hundred shares. It doesn't work out that well. So if the volume is still there, definitely kind of keep it around, but otherwise, just be a little bit careful with it. Anybody got any questions on anything? Live, huh? Let me see. Dun, 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 dun. Okay, so live has got a one. We'll have to follow this one and see if it's got any falter. It looks like it just popped just recently. This is a stock that's been really kind of beaten down. It's got a history of big runs. It does have a history of big runs. You have to see because it's under a lot of supply here. The chart's been really kind of nailed down. So we'll have to see kind of where it opens and stuff like that. This stock is also notorious for putting out some junky PR, and it pops up and then just fades back. I've been stuck in them a couple times like that. Michael says your hedge fund versus short trade. Can you do a quick comparison? Yeah, they're the complete opposite things. My hedge fund is not a broker. My job is to build traders. a broker, and we've referred people over to brokers before. The whole point of the broker is just to get an account and then churn the commissions. I don't make any money on the commissions. I give all my traders the par rate that I'm getting, which is 27 cents per 100. Now, if you're a trader that trades small, under 10,000 share blocks, 5,000 share blocks, and you scale out, then you want to be paying per share, because why would you pay a $5 flat fee if you're only trading 100 shares or 200 shares or something? But mine's not a broker. I'm not making money off commissions. How my business is set up to give my students capital and identify 15, 20 $1 million traders and then take a portion of their profits. And so, I have people like Mary Beth that I've given 500,000 in capital to, and we have a whole host of these new superstars that are developing, like Chris Prim and some of these guys. My job is to give them money, coach them, take 10% of their profits. If they want more capital, negotiate a better deal, and then provide them with the best technology possible. The best technology possible. And so we have Chaim come in, build a platform, and do special routing and execution so that we don't get stuck trading in the same routes as the HFTs and the algos. One of the things that you'll see in our hedge fund is how fast the executions are. I mean, it's nuts, because we use special routing and technology for all that. What we've built is essentially a premium technology and very special relationships on the routing and clearing. But I'm not a broker. I don't take deposits. I don't charge for commissions. And so it's just a different ball game. There's no right or wrong. If you want to pour $1,000 into a short trader or prop firm and get some leverage and get charged $5-6 for your commissions, then do that. If you want to come in and work at a hedge fund and have risk managers and a risk system that protects you, get super cheap commissions, and then have the possibility to get more and more capital to fund your career, then my hedge fund is the way to go, because that's what we do. Essentially, you can't be, the odds of you turning your $1,000 account into an income is zero. I've just never seen it done. There have been 3 or 4 instances out of tens of thousands of traders people that have done it, turned it into $1 million or 500,000. Those are the cream of the crop. I mean, they're super smart, super hardworking, and there involves a lot that goes into it. But the odds of that happening are zero. To make money, you need capital, and you need a lot. And so, that's kind of where we take these things, is we start these guys off small, and then, I start assigning them capital. My man Matty Trump's in there. If my man Matty Trump called me right now and says, Canal, I need you to put 10 G's in an account for me and let me trade it for you, I'd say, all right, that's my boy. I know he's a good trader. I do that. Hey, I'm going to take a piece of your profits. I do like TKMR. This is a nice breakout chart too. Probably this 22 spot. My only worry with this is, it's been up for a couple days now, so you want to make sure that, you don't chase it up too high, right into the resistance point. But it's got a really nice look to it. I would flag that too. Good one. Hey, Matty T. Matty Trump, I'm going to be in Los Angeles in Hollywood Hills the week before Thanksgiving. You going back to Boston? Maybe 2 weeks before Thanksgiving. I got to ask my assistant. Hey, thanks, Charles Powers. I tabbed that that link. I appreciate it. Da, 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 da. It's very, very hard trading small accounts, guys. When you have just a couple $1,000, oftentimes it's not that you're even a bad trader. Oftentimes the fees alone can get you, because when you pay $5-6 a trade, but unless you're trading thousands of shares, all the fees will eat you up, because it's really, really easy to do. It's really, really easy to do 30, 40 trades in a day sometimes when you're just all over the place. And so if that's the case, then what happens is the commissions every day are going to be like hundreds of dollars. And if you're spending hundreds of dollars a day on commissions, then it gets very, very tricky. So guys, it's 9:15. I gotta go. Does anybody have any final questions or anything they need some help with? I got a few minutes here before I gotta start getting ready for my day. Oh, do you see CHYR as a potential long or short? Let me look, brother. CHYR, I wouldn't see this as a potential long, because see when a stock's been up 1, 2, 3, 4, 5, 6, 7 days in a row, you can't swing trade something like this. When you get stocks that you swing trade, you want to get them within the base. That way you can manage your risk. If you get it within the base, then even if it's a dud, you only lose 25 cents. If you get it up here, then you can lose all of this. It becomes much trickier. I wouldn't say it's necessarily a short just yet. It's not like it's gone. I mean, it's up a lot, but I think it needs once if it can get really vertical, it'll be a little bit different. But I like the look of it. I'm gonna flag it myself and watch it for a little bit. I'm not familiar with this stock, so I'll watch it and see what's going on. But I would probably lean more to the short than long at that point. Yelp, when a stock is a big nasty pullback like this, there's two things: probability and risk. So the risk is low. If you had got it the couple days ago, now if you get it up too high, your risk is all the way down. You might even have to put it under the 200-day moving average. Your risk can be a little high, so you may want to watch this one for a while and let it set up or base out, because you just don't know if it's going to bounce right here. RPRX. This one is a hard long. It really is. It's a hard long because you just don't know. I mean, it's obviously a news play of some manner. We have a certain setup that we like to call rubber band setups, and maybe it's ready for that. I just think that depending on your skill level, a rubber band setup is maybe the hardest setup to nail on the long side. So, you just got to be a little bit careful with these things. It is extended, but it can go down even much farther. If you're looking at, how these things really, really bottom out, sometimes if they can base out for a while, it lessens your risk, if they can go sideways. But I do see what you're saying. It's due for a snapback. I just think that these things are really, really tricky unless you got a lot of skill. All right, that's a wrap, folks. I got to get going. Hey, Alex, I'm like 500 emails behind. I will answer. I'm getting to them. I'm down here on visiting family on vacay. My mom's up my ass right all day and night. She don't even let me leave the house. All right, folks. I will see you all. I guess I'll see you all Thursday. Well, we'll probably have some other webinars around in the meantime. But if not, I will see you all Thursday. Take care. And I'll tell you what, man, it's freezing in Michigan right now. Oof.